Happy Friday. Big news in the mortgage world as we saw some substantial drops in rates this week, with the 30-year fix opening this morning at 6.72, down from last week's 6.87. And the question is, what's driving this move and where do we take it from here? So it ultimately is twofold. First and foremost, the ceasefire in the Middle East, creating some stability within the global financial picture and ultimately a relief rally here in the States. Investors are liking kind of the suppression of volatility. Second, rate cuts. Now, obviously, no rate cut has been announced, but Jerome Powell took to Capitol Hill this week and echoed a lot of additional voting members' kind of voice around rate cuts need to start hitting the pavement. And Jerome Powell ultimately laid out the framework for where and when we can expect rate cuts. And it's looking the potential for the first rate cut to be as early as next meeting, which would be July. And hey, that would absolutely help kind of move these bottleneck process forward, unlock some of that frozen inventory, frozen buyers, with bringing the cost of money down overall. That said, let's talk about the elephant in the room. We got housing data this week, and we saw new home sales in the month of May down 14% year over year, and the months of inventory cook up to 9.8. But we take that with a grain of salt, because here the opportunity that this presents, as the resale market is still boding exceptionally well, this presents opportunity for our buyer clients in that seller concessions are in huge play right now. We're seeing appetite both in the new sale or new construction as well as resale market command a tremendous amount of attention. So really opportunity for our buyers right now. We haven't seen a market like this for buyers, since pre-2017. So it's what a lot of our buyers have been waiting for. The other big news of the week, crypto related. Yes, crypto has entered the chat, and FHFA has spoken. Federal Housing Finance Agency came out with a directive this week that will allow cryptocurrency to be utilized as an asset. For the longest time before, if you had holdings in Bitcoin, Ethereum, the list goes on, in order to count it out as an asset, it needed to be liquidated. Well, that has since changed. More to come on this as it's an evolving component, but this is a huge win, especially given the recent run up in the cryptocurrency market as of late. So really, what do we do with this information now? I would say this presents an opportunity to you as in the agent community to engage with our clients, utilize the rate reductions that we've seen over the last week as an opportunity to engage and share, hey, if you're in the crypto space, I know there was a lot of concern. No, you don't need to liquidate it. It does count as an asset in your qualifications for a mortgage. As always, if you need help cultivating this message, engaging this message, we would love the opportunity to support. Please reach out. We're here and happy to help. As always, please like, subscribe, comment, and help us get this message out to as many people as you see that can benefit from it. As always, let's make it a great day and an even greater weekend.